You ready? Yeah, you got me running. Shake it, baby. Raise your hands up. Raise them out.
All right. Hi, everyone, and welcome to today's episode of the Daily Currency Call presented by Forex Trading Asia. And it is Thursday, just past 11 o'clock GMT +8. Hope everyone's having a great day or evening or afternoon, wherever you're watching this from. We do have an international audience as well. And we appreciate everyone that does come in and watch and participate, especially if you're watching the call right now. You are one of the club members of LCMS Traders, so thank you. And it's episode 417, and it's the 11th of November. And if it is your first time here as well, a big welcome. If you are watching the delayed telecast on YouTube, quick introduction. We do the call every Monday to Friday at 11 a.m. GMT +8. And the currencies we analyze are as follows. Monday, we do the Aussie and Kiwi. Tuesday, we do the Euro. Wednesday, the Pound. Today, Thursday, Yen and Gold. And then tomorrow, Friday, CAD and crypto, specifically Bitcoin and Ethereum. And in the currency call, you will get the market economic updates, the key support and resistance levels, and of course, the trade ideas. We also break down the fundamentals as well and the key news events to pay attention to and what the data all means in regards to trading opportunities. And the currency call will be very beneficial to both the long-term investors and also the short-term traders. And here we will go through what could move prices, possible trade ideas, and we'll also highlight the potential targets for take profits and also the stop loss positions as well to establish your risk. Now, a disclaimer as well, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering in any trades. And always feel free to ask questions in the Zoom chat and also in the LCMS Traders Club chat, just depending on which currency pair you're referring to as well. So just to kick things off as well, hey to everyone, we've got a bit of activity in the chat. It's got a few in as well this Thursday. What I'll do now just to kick things off is go to the US dollar index here as well. And there has been a little bit going on as well for the index as well. And I'll just bring this up now. So a couple of key points to raise as well as my charts load up here, guys. We do have a lot of buying momentum that's been taking place as well. If you were in the live call yesterday, or it might have been early today, depending on where you are in the world, we appreciate it. And I'll just bring this up now. There we go. All right. So US dollar index, I do have a trade going on the Aussie dollar just for full disclosure as well. And we are seeing the US dollar index move a little bit higher as well. So it was an interesting session after the release. So that was 9:30 p.m. GMT +8. And what we did see, I've just got the daily time frame just to highlight the significance of the daily candle. But within a daily candle, quite a lot of things can take place. And if I do zoom out, you can see it does look, quite parabolic, but we zoom in and you can see that there were some pullbacks, and even when it was testing 94.70, it looked like there might have been a rejection taking place. But then, even though that's how that candle closed, we still saw it move higher. And then during the release as well, which was a few candles ago, we did see there was a little bit of movement beforehand. We had discussions about the Fed moving a little bit sooner on interest rates. That wasn't mentioned by Jerome Powell, that was mentioned by an FOMC member, Barnyard. And we did see a little bit of a lift in the US dollar. We went through 94, had a little bit of a pullback, and then we had the release and it was quite a strong candle, but then we did have a bit of a shakeout, or whatever you'd like to call it, a stop hunt. And that was a little bit tricky. Aussie dollar was on, and then it was, again, if you endured all of it, congrats as well, because there was later in the session with US, there was an opportunity to take it, but currently we've got what looks to be like a move to 95. Now, rough resistance levels, there's a little bit of minor resistance up at 95.75. So we've got a bit of space here to go. Now, a consideration to make as well is we do have Veterans Day in the US. So tonight's session is going to be, it's going to be quite limited in regards to participants, but FX markets are open. So we've got a technical breakout here. We could well see some inflows of more buys because we don't have any catalysts in regards to the US news that's out. And I'll quickly just share the economic calendar here with Forex Trading Asia. And so just quickly touching on the inflation, this is really what drove the flow of the US dollar higher. But again, it's always a bit tricky. And that was a good example from yesterday. So you've just got to be willing to, wait a little bit longer because it made sense that the US dollar was strengthening, but there was some shenanigans going on as well. So you've got to be cautious. And that's why risk management is very important, because you could have the right idea, but then if you're risking a lot, then it's still not good because you've done some damage to the account. So the CPI month on month, 0.9%, 4.6% year to year, everything was elevated as well. So this is something that the Fed probably didn't want to see. The market was, obviously keen to get on the US dollar on this. And we do have yen and gold to talk about today as well, Jin, and there was quite a lot of movement there as well. But for today, as you can see, not a lot of US news. And then we do have tomorrow, we've got some consumer expectations and sentiment as well. It's preliminary for November. We can see it's expected to be a little bit better than October. But for the US dollar, more upside is likely, but a bit slowish today after we saw that significant daily candle as well. When we normally see that, it's hard to see another one print the second day, especially with the banks, not being active with Veterans Day. But in conclusion, guys, more upside. And what I would say is that if you didn't get anything, just, hold off and see what happens later into the session. And there's always opportunities around the corner. But up next, though, we do have Kim Hong, currency strategist, just going through a trade idea on the Aussie account as well. So I'll just hand it over to you now, Gimmy. And yeah, for the Forex briefcase account holders, make sure you check your managed accounts this morning. Very good surprise. What are? Lots of what are's. All right, over to you now, Gimmy.
Thanks, Scott. Okay, so the trade idea that I'll be sharing today is on Aussie dollar. Aussie safe from Evergrande for now. Okay. So this trade idea was actually sent out on October 19. Okay, quite some time ago. So basically, the motivation behind this is that there's some positivity coming from the Evergrande saga. Okay, so yeah, there's like news that back in October, I think 18 or something like that, or like 17 or something. All right. So yeah, as you can see over here, the members meaning the Reserve Bank of Australia's members, okay, they actually highlighted in the released minutes, okay, for the previous meeting that the impact of Evergrande, okay, it can actually have a negative impact on the developers and financials that is actually related to the whole Evergrande business, okay, but they felt that the RBA, okay, felt that this negative impact is unlikely going to flow out of China, okay, so it sort of like sparked some optimism over there, okay, that's one thing. And then second thing is that the China Central Bank, okay, the PBOC, People's Bank of China, okay, said that the whole Evergrande debt problem can be contained, it's controllable, it's not going to be like another Lehman Brothers kind of saga, okay, so that kind of like sends some optimism across the market, okay, so it's like some hope being sent across, because people are actually worrying that the market was actually worrying that Evergrande may actually default their loans, okay, leading to another new huge big saga, property bubble burst in China, okay? And also we can see that there's actually a double bottom over here, right? So the motivation behind is, fundamentally speaking, is actually on Evergrande, okay? Technically speaking, there's actually a double bottom, all right? So if we were to look at the chart, okay, yeah, so I have a neckline, this long blue line over here, okay, and above it, if it cross above it, okay, break above the neckline, hitting the 0.752 level, then it will be a buy entry, okay? So yes, it actually hit eventually, like a couple of days later, okay? And yep, my entry got triggered, all right? But, all right, it was not so strong, okay? Personally, I would say that the optimism sent across, okay, was not so strong to push Aussie dollar way beyond my entry level, okay? So it actually came down a little, okay? And it actually went up. Now, I think it was 1 or 2 days before the RBA, the most recent RBA meeting, that I actually decided to close, okay? Because we were expecting the RBA to hold monetary policy unchanged, okay? Although there was some like bond buying by the central bank, okay, on the 2024 government bonds, okay? So the thing is, because of the uncertainty because at that time, the market was actually expecting the central bank to drop its yield curve control, right? So there was this uncertainty that I don't want to risk, okay? So I decided to close my trade. For a mere profit of 7 pips, is pretty much as good as nothing, okay, in this case, because it's a long-term trade, right? So we're actually expecting something more than 7 pips, okay? But, there's a saying that says that if you don't lose any money, you are winning, okay? If you don't lose, you're considered winning, all right? So that's the main point I would say I want to like highlight for this trade idea, okay? So after I close it for 7 pips, okay, the RBA, as widely speculated, okay, actually decide to drop the YCC, the yield curve control. But instead of strengthening the Australian dollar, it actually weakened, okay? And I've mentioned previously during the coverage on the RBA meeting, okay, that this is likely due to a, a priced-in move by the market, all right? Because when the central bank actually carried out the purchase of bonds, the market was actually speculating that the central bank will be dropping the YCC during the meeting, all right? Which is why we actually see a strengthening in the Australian dollar towards the end of October, like from the period of October 22nd to just before the Australian dollar weakened, okay, during the monetary policy. I think it was on November 3rd or something, all right? So upon announcement of the dropping of YCC, as you can see on this vertical yellow line over here, okay, this super huge long red daily candle, this was actually caused by the dropping of the YCC, the price in action, okay? And days after, okay, we actually hear that the Evergrande was actually, because there are actually more bonds interest that has to be paid by Evergrande to investors, okay, to bond holders. So from time to time, we keep hearing warnings being sent out by news broadcasters saying that, will Evergrande miss this grace period, miss this bond interest payment and things like that, right? So days after the RBA, there's more bond interest due, okay, for the Evergrande to pay back to their bond holders, okay? And yeah, the uncertainty, okay, led to more weakening on the Aussie dollar, all right? And let me share with you guys this article. I think I just sent it this morning in the Ecofin platform, okay? Evergrande teeters on edge of default as 148 million payment falls due. Basically, Evergrande is due to pay 148 million bond coupon on Wednesday, which was yesterday in terms of GMT plus 8, okay? But because of time zone and things like that, over at their side, okay, probably the US side, it's still Wednesday. So, there's a huge payment due today, okay, for Evergrande. So will they actually, be able to pay off, because this is actually the last day of grace day already, they have actually a, over here, some bondholders of cash-strapped China Evergrande Group have not received coupon payments by the end of 30-day grace period, okay, at close of Asia business on Wednesday. So, that may spell more trouble for Evergrande, okay. That's one thing, all right. Second thing, okay, since we are talking about Aussie dollar now, I might as well just, do some brief coverage of what went down yesterday and what happened earlier on today, okay. So yesterday, the US CPI was released, and guess what? Okay, it was actually stronger. The monthly data actually showed, I think, something like 0.9% rise in inflation, okay, as opposed to the expected rise of 0.6%, okay? So on an annual basis, inflation actually hit a 30-year high. Yes, a 30-year high level, okay, inflation level. This is very, very strong, okay? So strong that right now the market is actually expecting, okay, the Federal Reserve to hike rate, okay, once the bond, once the QE tapering ends in mid-2022, okay? So, suppose the central bank, the Federal Reserve were to, carry on, QE tapering at the rates of 15 billion per month, okay, consistently without any changes, then we can expect QE tapering to end in June 2022, okay? If that's the case, we may actually be seeing a rate hike as soon as July or August 2022, something like that. So yeah, because of this, we actually see an across the board strengthening of the US dollar, okay? So that's one more point to highlight for the Aussie dollar, okay? And the next point I want to highlight is the employment data that was released early on today, okay? Coming from the Australian side, okay? And apparently, okay, the jobs report for the month of October actually disappointed, actually sent a tone of disappointment throughout, because unemployment rate actually rose higher than expected, okay? That's one thing. Second thing, as opposed to an increase in the number of jobs for the month of October, there was actually a decrease in the number of jobs, okay, which is a little unexpected, to be honest, okay. Maybe we can expect something like a slowdown in the increase, okay, an increase, but still a smaller increase than expected, okay, but we actually received a decrease in the number of jobs, okay, being added for the month of October, okay. So because of that, personally, I'm actually expecting a further weakening in the Australian dollar, meaning the Aussie versus USD, okay, because we have strong data coming in from the United States and we have weak data coming in from the Australian dollar, okay, and on top of that, the Evergrande saga, will add more downward pressure on the Australian dollar, okay? Nonetheless, okay, if you guys are trading Aussie dollar, I would still suggest you guys keep a trade short term, okay? Because in a scenario whereby the Evergrande, okay, were to somehow or another manage to pay off their bond interest, that will probably lead to some stagnation of the weakening of the Australian dollar, okay, because paying off the bond means removing more uncertainty, okay, from the Evergrande saga that that the company will default, all right. So that will definitely maybe cause some strengthening in the Australian dollar for the time being, maybe remove or stagnating the weakening of the Australian dollar, all right. So yeah, I've come to the end of my sharing of my trade idea. Yeah, the key point for this trade idea today is that, I think like what I've mentioned early on in the week on Monday, or was it Tuesday? Yeah, on Tuesday, okay, that, if there's any major news coming up, like monetary policy decision and things like that, do your trade management properly, be it trailing your stop or, closing your trades for whatever profit you were making at that time, or just doubling down your risk and things like that. Do whatever is necessary to handle the risk that may be coming up due to the major economic data releases or policy meeting. All right. So with that, I will hand it back to Scott.
All right, thanks for that, Gimme. And the trade idea is shared as well in the GIMS trade ideas section as well, guys, if you ever want to check that out as well. Just for people that are trading and working as well, it does help to be able to, when there's an option to get in and there's some nice moves and you can hold it for a little while, those are the trade ideas. But again, though, like Im just mentioned, it's not working out. Don't hang around and stubbornly hold the trade as well if it's not working out. But we do now have up next, we've got Jin just to discuss the yen pairs and also gold. And there's a lot of activity. I know there's a few people that like trading gold in here. So there's been quite a lot of activity going on, and also with the yen too. So over to you now, Jin.
All right, thanks for that, Scott. So yes, as you and Kim Hong have shared, a lot of activity has been actually only last night. We've been sitting around waiting since Monday, Tuesday, and on Wednesday night, markets started moving. Right now, I'm slightly distracted. I'm still trading. I'm still looking at the charts, going through a little bit of a retracement. So if you haven't already entered the trade or you haven't closed out your trade, we're probably looking at a slight retracement after those big drops across the board with that dollar strength. So if you have some profits, probably realize it, and then you can reevaluate to get into another trade following on from that. But with the focus on the yen pairs and gold, first thing to do, check out the news, forextradingasia.com, looking at the economic calendar. Today being Thursday, we had the employment numbers from the Aussie. Kim Hong has already gone through that. We've talked about the pound, dollar, and the pound GDP. Yesterday, anticipating that drop in GDP from a 5.5 to a 1.5 quarter on quarter, and then a year on year big drop from 23.6 to a 6.8. We're probably looking at not a very good number to be released for the pound. This would impact the pound yen, so something to think about there. And then we do have not a lot of other big price movers. You can see nothing going to influence the yen too much. And also, I think with the dollar, we're probably going to see that momentum carry through. So for the next couple of days, you can see not a lot of news to influence either the yen or the dollar. Checking next week. So checking next week on Monday, we do have some yen news, GDP numbers to be released. Was a 0.5, expected a minus 0.2% for the quarter-on-quarter GDP number for Japan. Usually the GDP number for release does not move the yen too much. So we're looking into that a little bit on Monday, possibly a little bit of volatility there, but I don't think it'll be significant. On Tuesday, we've got more pound news. So look at that for the pound yen. We might consider that for the pound yen. Looking at a possible change in numbers there. I still anticipate some pound weakness. Following on, we do have retail sales number from the US, which could move the US yen. Looking for anything in yen in particular. Export numbers not going to do too much. And then on Thursday, Friday, we've got a lot of other news, which I'll tell you more about it next week. We do have the CPI numbers to stay at a 0.1%. So you can see here that for this week and into next week, not a lot of changes, not a lot of news, big drivers to push the yen in a particular direction. So what I'm anticipating here for the US yen, this is US yen on the H4 time frame. I'm looking for momentum to carry on through. We were talking in the Traders Club last night during a live trading session. We were talking to look at yen on the H1 time frame for it to break above that 113.51 level, and it's done that. If you did catch that, that was about a 40 to 50 pip move towards the upside. At this point right now, I'm anticipating that resistance, the next resistance of 114.45, which is not very far away, about a 30 pip move away, or even slightly less, 20 something. I think that we might see it slowly climb towards that resistance and possibly get rejected or possibly consolidate at that point. So what you should be looking for is that at the 114.45 level, look for it to see if it would break above that point. For that 114.45 level to break above, you would be looking for further US dollar strength. Towards that 115.83, you'll be looking for further US dollar strength. You could be looking for buying opportunities above 114.61, 30 pip stop loss, 120, almost 120 pip take profit level, a 1:4 risk reward ratio towards that upside. I don't think this would happen very quickly. I would actually move that line a little bit further. I don't think this will happen very quickly because that resistance has held for 1 week, 2 weeks, 3 weeks already, and even further before that. Looking at it on the daily time frame, we haven't seen it even on the weekly time frame. The last time we tried to break that point was back in November 2018. So we are at a very, very high level. It could break if we do see that US dollar strength continue up, but sit there. I think it would probably consolidate at that point before any stronger break towards that upside. Alternatively, you could look to sell, but I think that to sell it back down, I would have other trade ideas that I would be more interested in, such as the euro yen, right? If we're looking at the dollar yen turning back down, then I would say, let it consolidate, and I'll be looking to sell the euro yen down from that 130.44 level, this support level. If that US yen does turn down, it could turn down, dragging the euro yen down. And with the way the euro dollar is dropping, it could also drag the euro yen down. So this is a bit of a way to have different trade opportunities across a similar instrument. You're looking at the yen pairs. If it breaks that resistance on the US yen, look to buy. If it breaks the support on the euro yen below that 130.44, you could be looking at about 130.30, a 30 pip stop loss for a good 100 pip take profit level towards that 129.13 support level. So I would look at it, consolidate at this support level before it breaks. And then if it does break that support, you can look for that selling opportunity towards the next support level. I was sharing this with the Traders Club members. This is high on my watch list at this point. The pound yen on the H4 time frame is consolidating, or has been consolidating, between 153.74 and 152.80 or .90. We had this green line saying that if it broke below strongly, we can be looking for that selling opportunity down about 120 pips towards 151.38. At this point, it's broken slightly, bounced back up. I think we're going to see that test and the consolidation again before a stronger break downwards. Why I think it's going to break downwards, we have been looking at the dollar pound data, looking at possibly some weaker news to be released, weaker data to be released with the news. Pound dollar, if it does break below that point, it's moving as we expected since yesterday. If it does break below that point, then we can be looking for that selling opportunity again back down towards 151.38. So I think you should be looking for something below 152.60. Tight stop loss, no, not that tight, about 40 or 50 pips towards that 100 pip take profit level, or 1:2 risk reward ratio towards the downside. Why this is high on my watch list is because I think that if the pound yen does break below that point, or does breach that 152.60 level, we could see it drop very quickly. I think this will be a quick trade, but it will need some time before it breaks that point. With all that said about the US yen, the euro yen, and the pound yen, what I would think about for gold is it's moved as we had been planning. We always said that it was going to test 1777 before turning back up, test before turning back up. At this point right now, I think that we're going to see momentum carry it through towards that 1896 level. So I'm looking for it to continue on towards 1896, but I don't think there will be much opportunities above 1896. I think that the same thing has happened back in June. Once it gets to that point, once momentum brings it up to that point, it will get resisted before turning back down again. So if you are trading gold, remember I'm looking at this on a daily time frame. There is some good upside to buy into gold, but it's probably not going to continue all the way up forever. That resistance level is quite strong at 1896 or 1900. That probably will hold prices before a consolidation and a turn back down again. So a lot of trading opportunities we've seen over the overnight last night, and also I think moving forward with the US dollar strength to be possibly continuing. Actually, I'll show you the US dollar chart. The dollar index chart here. It's broken that 94.53 quite significantly now, looking at a bit of a retrace, but I feel that, you know, looking at it on daily and also on the weekly time frame, the last time it broke above 94.53 way back then, we saw way back in June 2018, we saw pretty much a clear move towards 96. We saw that clear move towards 96. Again, in August 2018, once it broke up, we saw that move pretty much straight towards 96 level. And then not much after that. Once it broke below, we saw it come back in. So I think at this point, breaking above 94.53, we could see a clear move towards 96 before further decisions to be made about the US dollar strength. With that said, I will pass it back to you, Scott.
Thanks for that, Jin. And guys, there has been mention of the Forex briefcase performance as well. I just want to quickly show, if you are interested and you're a club member, the easiest way to go and do that would be, we do have the Forex briefcase chat as well. We've got that here. So if you are interested, check out the results. You know, Steve and I and everyone that's already invested, they do share screenshots, and we just go through how it's been performing as well. And then if you're not a member of the LCMS Traders Club, alternatively, what you can do is there is the website, which is forexbriefcase.com. We've got the fully verified track record. Now, this goes back until September 2018. So as you can see, it's been very stable with the returns. Currently, we're up 2.2% for this trading month, and that ends on the 20th. So there's still a lot more room for growth on the account still. And then we've got December as well. Currently, we're up, you know, over 21% and over 103% in 38 months as well. So something really to consider. Leave your details as well. We'll get back to you. And we would love to have some more investors on and just really enjoy making a passive income while still learning about Forex as well. But that is that for Forex Briefcase, guys. And that is the end of the episode as well. We've got a big one again tomorrow. We've got crypto as well, and also the Canadian dollar. But just be wary of the news that's coming out, guys, with the pound. And hopefully everyone's in the chat and we can make some more pips today as well. Thanks for watching, and bye for now, guys.